India is the world's second largest country by population and one of the most rapidly growing economies, making it a hotbed of real estate investment activity. The Indian real estate market is estimated to be worth $180 billion and is expected to grow to $1 trillion by 2030. The Government of India levies tax on real estate transaction. Under Section 194IA of the Income Tax Act 1961 states that for all the transactions with effect from June 1, 2013, tax deducted at source, which is TDS on property, is applicable when the value of the property is more than Rs 50 lakhs. The buyer is required to deduct 1% of the value of the property as TDS, which is to be deposited with the Income Tax Department. Then submit TDS online by 30th of next month, in which TDS is deducted. Buyer is not required to take a TAN. Buyer can also fill the Form 26QB available on www.tin-nsdl.com and deposit the government TDS. The buyer is also required to provide the seller with a TDS certificate in Form 16B as proof of payment. It is applicable on all properties except agricultural land. Let's have a look at some of the points to be noted. First, TDS is calculated on the base amount excluding GST. Second, if the amount is paid in installments by the buyer, deduct 1% from each installment. Third is, in the case of a home loan, TDS is deducted at the time payment is made to the seller, not at the time when EMI is paid to the bank. Fourth one is, in case there are two buyers and the individual purchase price is less than 50 lakhs but combined purchase price is more than 50 lakhs, then TDS will be deducted. Next is, this is also applicable when the buyer is a non-resident Indian. And the last one is, if the seller does not provide PAN, then TDS is to be deducted at the rate 20%. In case of default to deduct or submit TDS, if the buyer does not submit TDS, the sub-registrar will not register your property and you will be not able to get the property transferred to your name. TDS is a mandatory document and must be submitted to the sub-registrar. You can get a notice from the tax department as well. In some cases, officers can put a penalty of Rs 1 lakh as well. In case if a buyer does not deduct TDS, interest charge will be approx at the rate 1% per month. And if a buyer deducts TDS but does not deposit it, interest can be approx at the rate 1.5% per month. Now, the amount to be deducted would depend on the residential status of the seller and the residential status of the buyer would be considered. The next one is TDS applicability if a seller is an Indian resident. If the seller is an Indian resident, as discussed above, deduct TDS of 1% of the entire sale value and deposit the same to the government. In case if the seller is a non-resident Indian, which means NRI, here TDS is to be deducted regardless of purchase price. It must be deducted on all properties. In this, TDS will be on capital gain tax, which is sale price minus purchase price minus the expenses. So, if property is sold after 2 years, TDS will be deducted by the buyers at the rate 20%. There will be surcharge, health and education cess on 20% depending on the budget of the property sale price. If property is sold in less than 2 years, the nature of capital gains will be short-term capital gains and the TDS will be as per IT slab of NRI. Buyer will submit Form 27Q online and submit the TDS online. Buyer will give proof that TDS is deducted to the seller by giving Form 16A NRI. In case TDS is not deducted or deposited, the government will catch hold of the buyer and the buyer must deposit it. Hoping that we have cleared all queries on TDS to be deducted by buyers. Please let us know if you want us to cover any topic in the comment section. Till then, please like, share and subscribe. Thank you.